This is Bloomberg Quint, and we are tracking earnings from Godrej Consumer Products. Well, it's been a mixed quarter if you consider it and peg it against analyst expectations. So while revenues were slightly below analyst consensus estimates, we also saw margins which actually pleasantly surprised the street. To take us through the quarter as well as what we can expect going forward, we are in conversation with the Managing Director and CEO of the company, Vivek Gambhir. Hi Vivek, good morning and thanks for taking the time out. Let me begin by asking you about your assessment in general. There is clear softness not only in domestic markets but in the international markets that you operate in as well. How are you assessing the quarter, and if you could give us an outlook on growth specifically on the top line going forward?
So as far as India is concerned, we delivered a 5% volume growth. This was on a high base of 14% growth in the corresponding quarter. This growth was a sequential improvement versus the first quarter of the year. And if I look at our performance across April, May and June, June was definitely much better than April and May. And so we are quite optimistic that if we continue to build on this, and given the kind of new launches that we are planning and the actions we are taking, we should see a much better volume growth going forward for the remainder of this year. Clearly, there has been a consumption slowdown that has been persisting over the last 6 to 9 months. But with the recent pickup in monsoon that we are seeing, that should hopefully alleviate a lot of the rural stress. And the rural stress has been the single largest contributing factor for this consumption slowdown. The government's also taking lots of actions to be able to get rural growth back on track. The other challenge in the industry was liquidity in the channel. And with again the government and the monetary policy efforts to really improve liquidity, and hopefully with one more RBI cut coming in later in August, that should help enhance liquidity. So a combination of a pickup in monsoon, better liquidity, and some of the actions that we are planning along with the new product launches is making us feel quite hopeful that you should see much better volume growth going forward as far as India is concerned. In our international portfolio, we delivered a constant currency growth of about 9%. Indonesia growth was steady, though was a bit lower than the previous quarters. Over the last few quarters, Indonesia has delivered very strong profitable growth. There were some pressures we saw with one of the channels, the hypermart channel, but I think there were some channel readjustments required there. That's largely been in place now. The team has taken some very strong actions to expand the general trade footprint. There again in Indonesia, a very exciting set of new launches are being planned. So we are very confident of Indonesia returning back to very strong profitable growth.
Right.
In our Africa portfolio, South Africa has been recovering quite nicely. West Africa has been holding quite steady. The challenge we saw was in some of our export smaller African markets. So in Africa, I do expect top-line challenges to continue for a quarter or two, but we are taking very strong actions to relaunch the Darling brand, investing in brand equity for our brand. We're in investment mode there, but in Africa, I think you will see much stronger profit growth over the next few quarters, though top-line growth still might be a bit of a challenge. And then in the smallest part of our portfolio, Latin America, Argentina has been recovering very nicely on both top line and bottom line growth in spite of some very difficult macroeconomic challenges.
Right. Vivek, so when I consider the March quarter, the quarter ending March, we were actually seeing the growth that we saw in Africa and Indonesia businesses actually come and, perhaps, actually outperform the domestic markets. Now, given the fact that we do have a little bit of a demand, subdued demand in the domestic markets, and that's to do with the industry as a whole because of weak sentiment. A lot of analysts on the street were expecting that, your Africa and Indonesia markets would come to the rescue in terms of growth for GCPL as a whole on a consolidated basis. You do suggest that there are investments which are going into both these markets, and you are also saying that you are going to make some tweaks when it comes to your distribution, as well specifically in this case in Africa too. My question really is that a lot of this will go through a certain gestation. When do we start seeing that realization come through when it comes to the income statement, when it comes to your plans in these markets, so that we don't really have to worry as much about domestic markets then as far as the company is concerned?
So clearly, I think, on the international side, because it's a portfolio of multiple countries with different kinds of macroeconomic challenges, there will always be a certain amount of volatility quarter over quarter. Having said that, though, I think you will definitely see much stronger profit performance from an international portfolio starting in quarter two as well. On the top line front, definitely I think there will be improvements versus quarter one, but the Africa top line might take a little bit more time given that we're in investment mode. But from an overall P&L perspective, as far as profitable growth is concerned, the remaining quarters in international should be much better.
Okay. Vivek, what are the challenges with household insecticides? Is it to do with seasonality, or are there some problems that are specific to the company that you guys are addressing right now?
The challenges in insecticides are twofold. Firstly, as you pointed out, there was a delayed summer, an extended summer and a delayed monsoon this year. It's a bit of a seasonal category, and so that actually led to a significant slowdown in the category, just given the extended summer. The second, I think, challenge that we have been facing as an industry has been the prevalence of spurious and illegal incense sticks. And so for the second challenge, we've launched our own version of Goodnight 100% natural neem agarbatti. That is being scaled up as we speak across multiple states. And so that will allow us to hopefully regain some of the growth back in the category. At the same time, we are also planning for a couple of other very disruptive launches in the upcoming quarters. So a combination of a pickup in monsoon along with the new launches that we are planning, both in incense sticks and in other formats, should allow us to get our growth recovered back in this category.
Okay, just two more questions, Vivek. Are you also witnessing that when it comes to your soap segment, that customers currently prefer smaller packs as compared to larger packs? Is there any evidence of downtrading in these areas?
Not necessarily downtrading in terms of price, but definitely I think what we are seeing is that in certain parts of India, lower price packs or lower unit packs, particularly the 10 rupee pack and packs of 4, which are provide better value for the consumer, are definitely gaining more traction in some parts of India, particularly rural India.
Okay, and a final question on margins then, Vivek, because we've certainly seen considerable improvement. This perhaps is largely on account of the fact that we've also seen an improvement in gross margins. Will margins remain to be volatile, or can we expect to see the company maintain these margins going forward?
I think for the year as a whole, we definitely feel confident about delivering profitable growth. Our India and Indonesia margins are already very high. And in India, the focus will be to actually drive near-term volume growth. I think if we can drive strong volume growth, margins will follow because the input cost environment is quite benign. In Indonesia, the focus will be on both top line and bottom line growth. In Africa, the focus in the near term will be on driving profitable growth, though we are also in investment mode, but we do see opportunities to drive stronger profits in Africa. In South America, the focus again will be on profit expansion. So at a consolidated level, I think for a year as a whole, we still feel very confident of delivering profitable growth, though I think in the next couple of quarters, depending on the kind of investments we are making to drive volume growth and to back our new launches, you might see some volatility, but I think we are looking at the year as a whole and we feel confident about profitable growth.
Okay, Vivek, we'll leave it at that. Thank you so much for joining us here on Bloomberg Quint. We wish you the best for the future.